Every empire believes its gold will last forever. Every emperor, every king, every president looks at their treasury and sees permanence. But history has a different story to tell. And right now, that story is screaming at us through a signal so clear, so undeniable, that ignoring it would be financial suicide. Gold just shattered through $4,000 per ounce for the first time in human history. This is not a small milestone, not a temporary spike. This is the monetary equivalent of a fire alarm going off in a building filled with sleeping people. And if you understand what this signal has meant throughout history, you'll realize we're not just watching numbers on a screen. We're watching the early stages of a collapse that has destroyed every great power before us. The pattern is always the same. An empire grows powerful, builds massive armies, conquers territories, and promises its people prosperity forever. The gold flows in, the currency looks strong, and everyone believes the good times will never end. Then something shifts. The costs mount, the wars drag on, the debts pile up, and slowly, quietly, the empire begins feeding on itself. The gold signal starts flashing, and those who recognize it early become the survivors of what comes next. Here's what makes this moment different from every other financial crisis you've lived through. This isn't about one country or one currency. This is about the entire global monetary system, showing the same warning signs that preceded the fall of Rome, the collapse of Spain's empire, and the hyperinflation that destroyed Weimar Germany. The gold signal doesn't lie. It never has. And right now, it's telling us that 2026 could be the year everything changes. Let me show you exactly how this signal has played out across history, why it's flashing brighter than ever before, and what you need to do to position yourself on the right side of what's coming. The Roman Empire thought it had solved the problem of money forever. For centuries, their silver denarius was the most trusted currency on earth. Roman soldiers carried it into battle. Merchants across 3 continents accepted it without question, and families saved it for generations. The denarius wasn't just money. It was confidence in metal form. But running an empire costs money, massive amounts of money. Legions had to be paid, roads and aqueducts had to be built, barbarian tribes had to be fought on multiple fronts. And by the 2nd century, the math wasn't adding up. So, the emperors discovered the same trick that every failing government discovers. They could create more money by making each coin worth less. Under Augustus, the denarius was 95% pure silver. By the time of Caracalla, it had dropped to 50%. By Gallienus, less than 5% silver remained. A coin that once contained real value had become a bronze disc with a silver coating. The people could see it, they could feel it, and they stopped trusting it. Inflation exploded across the empire. A measure of wheat that once cost a single denarius suddenly required dozens. Soldiers demanded higher wages. Merchants refused debased coins. Local economies collapsed into barter systems because the currency was worthless. The more confidence eroded, the more coins the emperors minted, hoping volume could replace value. It was a death spiral that lasted 50 years and left the Western Roman Empire too weak to survive. But here's the crucial detail most people miss. While Rome was debasing its silver, gold held its purchasing power. Those who recognized the warning signs early, who converted their savings from silver to gold, preserved their wealth while everyone else watched theirs evaporate. The gold signal was flashing. Most Romans ignored it. The few who didn't became the survivors. Fast forward to 16th century Spain. The Spanish Empire controlled more gold and silver than any kingdom in history. Treasure ships brought endless streams of bullion across the Atlantic. Spain should have become the richest nation on earth forever. Instead, it collapsed under the weight of its own treasure. The problem wasn't the gold itself. The problem was what Spain did with it. Instead of investing in productive industries, they spent it on wars, luxuries, and imports. Instead of building a sustainable economy, they became addicted to the treasure fleets. And when those fleets were captured by pirates or lost in storms, Spain couldn't pay its debts. The empire that owned half the world's gold declared bankruptcy 4 times in 50 years. Again, the gold signal was there for those who knew how to read it. Spanish gold was flowing out of the country as fast as it arrived. Prices were inflating rapidly. The currency was becoming unstable. Those who held real gold, stored outside the Spanish financial system, preserved their wealth while the empire crumbled around them. The pattern repeated in Weimar Germany. After World War I, the government started printing marks to pay war reparations. At first, it seemed manageable, then it accelerated. By 1923, hyperinflation was raging. A loaf of bread that cost 1 mark before the war cost 200 billion marks by the end. People carried wheelbarrows full of cash to buy groceries. But gold told a different story. As the mark collapsed, gold's price in marks soared into the trillions. Those who had converted their savings to gold before the hyperinflation began survived financially. Those who trusted the government's paper currency lost everything. The gold signal had been flashing for years before the final collapse. Most Germans ignored it, the few who didn't preserve generational wealth. Now, look at today. Central banks around the world have been accumulating gold at unprecedented rates, over 1,000 tons per year, for the last 3 years. That's more than double the historical average. China alone has been buying gold aggressively while quietly reducing its holdings of US dollars. Russia has been doing the same. Even traditional Western allies are diversifying away from dollar reserves into gold. This isn't random. This is the same behavior pattern that appears before every major monetary system collapse. Central banks are the ultimate insiders. They have access to information you and I will never see. And when they start hoarding gold while their public statements insist everything is fine, you need to pay attention. The numbers tell the story. Global debt has exploded to levels never seen in human history. The United States alone carries $38 trillion in debt, growing at 9% per year. At that rate, the debt doubles every 8 years. The mathematics are simple and brutal. This cannot continue indefinitely. Something has to give. Meanwhile, the response to every crisis has been the same. Print more money, lower interest rates, flood the system with liquidity. The Federal Reserve has expanded the money supply by trillions of dollars since 2008. The European Central Bank has done the same. Every major central bank has followed the same playbook. Create money out of nothing to solve problems created by creating money out of nothing. This is exactly what Rome did with the denarius. Exactly what Spain did with American silver. Exactly what Germany did with the mark. The technology has changed, but the fundamental mistake remains identical. Governments always believe they can create wealth by creating money. History proves they are always wrong. Gold is responding exactly as it has throughout every previous collapse. The price surge isn't speculation. It's not manipulation. It's not a bubble. It's the market's way of saying that confidence in the current monetary system is breaking down. When gold hits $4,000 per ounce, it's not celebrating its own success. It's mourning the failure of everything else. The forecasts for 2026 are staggering. Multiple analysts project gold could reach $5,000 to $6,000 per ounce within the next 18 months. Some models suggest even higher levels. But these aren't wild predictions. They are mathematical extrapolations based on current trends in money printing, debt accumulation, and central bank behavior. Here's the most important number. Only half of 1% of global financial assets are currently invested in gold. In 1980, that figure was 2.7%. If gold investments return to 1980 levels, it would require 230,000 tons of gold. That's roughly equal to all the gold ever mined in human history. The supply simply doesn't exist. The only way to balance that equation is through dramatically higher prices. The gold signal isn't just flashing, it's blazing like a beacon in the darkness, warning us that the monetary system we've lived with our entire lives is approaching its expiration date. Every empire in history has faced this moment, and every empire that ignored the warning paid the ultimate price.